This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Joining us today is the CEO of Caracal Gold, Robbie McCrae. Now, last time we spoke, Robin, we were expecting some reporting from the company on progress and sales. And of course, you've released that today, and that's what we're going to talk about. So welcome. How are you doing?
Very well, and you, Mark. Thanks for your time. Yeah,
thank you.
Quarterly.
Good. Thank you for your time. So from looking through the report, I can see that the gold sales during the quarter totaled 1,047 ounces. And your operating costs reduced to $960 per ounce. So just looking at some figures then from the report, that would suggest then that you've had about $1.8 million of sales at a cost of around $1 million and a profit therefore about $880,000 or 650,000 pounds. Does that sound about right?
Yeah, that's the margin on the ounces that were sold during the quarter. That's correct, Mark.
Okay, so if that was to continue, then that would mean approximately a £14 million revenue per year. But of course, you want to increase on that, don't you, to at least 1,000 ounces per month. So again, just running the figures there, that would, from my maths, equate to about $21 million per year, or £15.5 million. At the same cost there that we've discussed there, $960 per ounces. So that would effectively mean a profit potentially of $10 million a year, £7.3 million. Again, is that sounding about right?
Yeah, that's correct. I mean, it's very high level, but it's correct.
Yeah, no, it's very rough figures, but just to get an idea of what's going on. But of course, you've talked about wanting to go to 2,000 ounces per month. So in theory, those figures would in fact double. So is that the plan then, Robbie, to still double those figures? And what would the revenue look like at that point, and how would it be used?
Mark, yeah, we presented a three-phase plan for the development of Kilimapesa. We're in the final stages of the phase 2 development plan, which was getting to the 1,000 ounces per month. And we're starting to program and work towards an engineer and budget for the expansion from the 1,000 to 2,000 ounce per month, or the 24,000 ounce per annum. We've come out to the market and said that we've got the engineers on site at the moment, and we're starting to work towards that, and so we can present the final plan and push the button hopefully on that late in the first quarter or beginning of the second quarter of this year.
Okay. And would most of the money be driven back into the project, or would you be looking to use the funds for exploration, or what would be the plans for the revenue generated? Because it would be quite significant.
Yeah, I mean, Kilimapesa it's a hybrid asset. We took it over, and very little exploration had been done, but an underground mine had been developed and a plant had been built. So we've channeled a lot of the money that we're making out of the operation now into the exploration. I mean, we've been drilling flat out since the beginning of January, and we're funding all of that drilling exploration internally and growing the resource. We continue to fund all the capital projects out of money that we're generating from the operation. I mean, we've kicked off the engineering design and the earthworks on the construction of our heap leach project now, and we're funding that all internally at the moment. So as we speak at the moment, all the money is being ploughed back into the project. Once we've constructed the larger plant to do the 24,000 ounces per annum, that requirement won't be there anymore. We'll have capitalized, build the plant, and the revenue will go into the company, probably into some of our growth projects. Okay,
that's good to hear. So, we know what we're targeting: 1,000 ounces initially, then going to 2,000 ounces. The best you got was, 872, was it, in December? So you didn't quite hit the 1,000 that you were going for. Is there a reason for that?
Yeah, I mean, over the quarter we did 2,088 ounces. December we pushed really hard, applied ourselves and pushed for that 1,000 ounce target, which we tabled. I know a few people in the market might be a bit disappointed, but it comes down to we had some disappointing grades coming out of the underground mine. From a mining point of view, we delivered the tons. From a processing plant point of view, We processed the tons on budget. We had some disappointing grades. It was during the second week of December. We had some disappointing grades coming out of the underground mine, and that impacted on us. Have we tackled the problem? Yes, we've got 2 drill rigs on site. We're doing a lot more grade control drilling underground. The grades from October through November through to December, the average grades that we're delivering stabilized and improved considerably. So yes, we've addressed the problem, and we're dealing with it. So.
Okay. So monthly ore production at Kilimapesa increased by 34% over the October to December quarter. And as you say, as the mine expansion program continued to be implemented. So is that going well then, that expansion? And also, what about the consistency? Are you seeing sort of, you say, stabling of consistency here?
Yeah, another key thing for us was make sure that Kilimapesa was stable. I mean, all the money that we're investing, a lot of it is going into making sure that it's stable, making sure we're maximizing operating time, maximizing hours, maximizing availability of all of the equipment in the plant. So yes, we've very pleased that we come through December, come through January, very stable, very much in line with what we achieved in December, but more stable on the grade. And coming through into February, yeah, the numbers are good. We're hitting our daily and weekly targets out of the mine and through the plant.
Now, the RNS also stated that there was 18,500 tonnes of low-grade material stockpiled on site in preparation for processing through a new heap leach plant operation, which is due to start production this year. It also stated that total gold in stockpile at the end of the quarter was reported at 2,919 ounces. Could you elaborate on this low-grade material and how that might fit into the picture? Is it like a bonus to the main operations?
When we're mining and producing the high grade material, we mine lower grade material as well, and we mine waste like any other operation. There was never a plan previously to treat the low grade material, and as we're doing the feasibility study work and we're understanding more and more about the operation, we're getting a handle on how much of the low grade ore is being delivered at the moment. We've got a good handle on the grades of the low grade material. We've run some initial metallurgical test work, and the preferred route is the heap leach operation. It's low capex, low opex. We've done the front end engineering on it. Yeah, so we know how much low grade material we'll be delivering out of the mine on a monthly basis. And yes, the low grade material that we've stockpiled over the last 4 months is a bit of a bonus. It gives that heap leach project a kind of a really good start. So that material paid the cost to mine it. We've transported it to the plant, and now we're busy with the design of the heap leach plant, and that's how we will recover the material. And then on a monthly basis, on an ongoing basis, the low grade material will be treated through the heap leach. There is some high grade material which is the mill scaps which come out of the plant, out of the milling plant. We've also run met test work on that, and that will also be going into the heap leach. So yes, the heap leach going forward is going to be a key part of our operation. Nice low capex, nice low opex.
Okay, excellent. So you've got the full production going on, the main mining, of course, and then the low grade stuff as well coming through the heap leach. So that's nice to hear. I want to talk a little bit about gold recoveries. You mentioned in the update that you had 80% and 52% respectively. Is there any room to improve on that?
Yeah, again, like we inherited the plant, and no detailed metallurgical test work had been done on the design of the plant when we inherited it. We've got samples at the laboratory in Germany. The metallurgical test work campaign is underway. You can appreciate we're doing met test work for the milling plant. We've done the met test work on the heap leach plant, and we've done some met test work on the tailings plant. So all of that met test work is in progress. And the reason we're doing it is to improve recoveries, improve efficiencies, and hopefully drive down the overall operating costs. So that's in progress. And again, it's going to be nice news flow. We'll be able to announce the results from that met test work going forward and keep the market informed.
Okay, good. And of course, as well as the operations and building on the operations at Kilimapesa, you also said that gold resources have increased to over 1.5 million ounces during the quarter based on the addition of 2 additional advanced gold projects in the company's portfolio. So can you tell us a little bit more about this as well? So this is further to your current operations building out here.
Yeah, I mean, we haven't quite got to the 1.5 million ounces yet. We've got the drilling program which we've implemented is targeting that 1.5 million ounces. We've been drilling since the beginning of January. We've completed 13 reverse circulation holes to date, 2 diamond holes to date. So the drilling is going well. Samples are in the lab. We're waiting for the results so we can start putting out the results on the exploration. But it's going well. I came out last week and I was with the geological team and the exploration team on this morning, and we're still targeting the early in the second quarter of this year to put out our first mineral resource update. But we're targeting that 1 million ounces. The program is all tailored to get to there during this year.
Okay. Well, you certainly look quite happy this morning talking to you. What's the feeling on the ground with the team there?
The guys are very proud, Mark. They've worked very hard over December. We've achieved a hell of a lot during that quarter. I mean, we listed in September, and to get where we have by the end of December is a massive achievement. The meeting this morning focused around the sustainability and what we achieved during January, and we had the wrap up of January and talked about the plan for February. Very exciting, and then obviously the additions to the team that we've got on site, the heap leach project manager, etc., all talking about the scope of work and the upcoming expansion. So it's good. We're a busy company. We're going to generate good news flow going forward over this quarter and over the following quarter. The confidence in Kili-Mapesa is growing, and as our confidence grows, hopefully we can communicate that to the market, and the market will the market's confidence in Kili-Mapesa will also grow. It's a fantastic opportunity. It's a cheap entry into a producing mine with tremendous exploration potential. So people get to grips with this and value us accordingly.
Okay. Well, I expect we'll be talking again soon. It seems like there'll be a lot of developments to follow. But thank you very much for going over the revenue today. That was something that we've been anticipating for a little while, and talking to us really about the last quarter. Robbie McCrae, the CEO of Caracal Gold, thank you very much for your time.
Thank you, Mark. Thanks very much.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.